Able this morning. Good morning, Pete.
Morning, John.
Good to see you, sir. Tariff revenue, how large and how bond positive is it going to be?
So I think that's the one thing we're missing. So the last 2 months, we've generated about 20 billion extra. So for the last 5 years, we ran between 8 and 9 billion a month in tariff revenue. That's popped to 28 billion. It probably goes down a little bit, then some sort of steady pace, probably around that 30 billion. That will offset a lot of the deficit. I think that's a good part. But now it also explains why we haven't seen tariffs hit the economy at all, right? Only 50 billion, 60 billion so far. It's a tiny drop in the bucket of this economy. If you think about a company, even if they turn their inventory over twice a year, it's going to take 6 months or so before they have all their inventory affected by tariffs. So I think the inflation pressures from tariffs, the earning pressure from tariffs are down the road. And the other problem that we're seeing, I think, a little bit, it's hard to decipher, is it seems like it's hitting small and mid-sized companies much harder than large corporations, right? Large cap companies had the working capital, they had the ability to move their shipments around. It hasn't happened about the small and mid-sized companies, and I think that's taking time to leak into the data.
So you can push through that idea into the bond market, as John was sort of hinting, and both of these would be supportive for the bond market. They might question the stock market a little bit more in terms of any kind of pressures to growth. Is that your thesis here?
Yeah, I think we're back at 440 on 10s. This is sort of level I start liking them again. I think we should be much closer to 4%. I think Powell's going to have to cut a little bit, and I think all the fears about the deficit, while real, they're missing some of this trade, tariff revenue, and I think we've got to be really, cautious, or think about it this way, right? President Trump, Howard Lutnick, right now they are seeing all the benefits of tariffs, this additional revenue. They're not yet seeing the downside, so I think they're going to continue to push on that, and they're going to wait to see if there are problems. That might be when they back off or change their tune, but right now they'll drive those revenues, they'll try and get the deficit down, and I think the bond market's kind of missing that whole story.
This is bond positive in terms of lowering the deficit as well as potentially slowing growth. It doesn't sound particularly positive for stocks, which just had their 6th straight record close. If they're seeing a 7th today, that would be the first time going back to November of 2021. And stocks haven't moved more than 1% in a month. Is this a shock-proof economy, as Rick Reeder is saying, or is this something that maybe is just in denial?
So I think, the tariff is actually pushing down on stocks. On the other side, what you've got, I think, is this, we've been calling it Academy Securities, national production for national security, right? We have to produce and make things that are good for national security. So 2 weeks ago, the Department of Defense invested $400 million in MP. They got $1.1 billion of debt. Bassett, I think last week when he was on with Anne Marie, basically almost said those exact words of, national production for national security. And then President Trump went on about data and AI and how important it is, how we're going to make sure we have the electricity for AI to run. So I think there's a lot of support for that. And I think that's actually what's propelling the market. It's also why it's very concentrated in a handful of sectors.
I'm pleased Lisa mentioned Rick Reeder. It's a fantastic piece of the Financial Times, if you happen to read it. There's a quote in front of me. Markets are not ignoring risk. They're pricing a system built to absorb it. A service-oriented economy, fortress balance sheets, and a liquidity-rich investor base deliver a 2-for-1. Resilient growth and elevated fixed income yields. That's the power of US financial markets. How does the rest of the world compete with it?
Well, weirdly, they're doing pretty well. Especially, the one thing I think we're missing right now is part of what's driven, I think, the U.S. stock market return is the weakness in the dollar, right? DXY is down significantly. All of a sudden, you're seeing DXY creep back higher, right? And I think the lower dollar has been a big benefit. You look at European, stock markets. For a U.S. dollar investor, they're up significantly more because of that. So I think the weak dollar, if that starts reversing, that will actually put some pressure on U.S. stocks. I do think we're resilient. I think it's about the growth story. And the one thing, that really ties in nicely to this whole, national production for national security is the accelerated depreciation and a couple other things in the big, beautiful bill. If we can just jumpstart that, there is that opportunity. So I think there is a growth element with this tariff, and those are kind of balancing out. I think right now the growth story makes sense.
Correlations were really messy in April. Have we re-established more intuitive correlations between risk, between equities, bonds, and foreign exchange for that matter?
I think they're normalizing a little bit. And again, it's, we talk about some of these negative trade deals for Europe and other places. Their stock markets continue to do well. If you look at FXI as, an ETF on China, it's actually way outperformed the U.S. So, yes, we've been successful, but other countries seem to be doing well. And I think when I look at these tariff deals, I think what you had is a situation where countries that all of a sudden in shock. You can't just say, whoa, I'm walking away from the U.S. We will see what the world economy looks like 6 months or a year down the road, right? Everyone's going to come to the table. Everyone's going to say some sort of deal. But then what do they really try and do? Are they content to try and work with the U.S., or are they going to try and figure out alternatives? At one time, EU was starting a a trade deal with Canada. That kind of died. Do things like that get resurrected? And the other thing is, I think we're seeing tariff mitigation strategies across the board. Canada, Mexico, USMCA compliant goods, they're getting approval for those things. So it's not as bad as it looks either.
Earlier this year, you were concerned about the tainting of the American brand and how there'd be a boycott internationally. You sound a lot more positive now. Why?
So I'm still worried about where we're seeing that. I think you're seeing it in tourism. You've seen it in certain car companies. I feel like they're not getting the sales globally. So I think that will all take time. I think we've changed the tone from less punishment to, okay, let's try and make deals. And it seems like the president has softened. I think we've also had some big successes. I'll go back, and a lot of it changed for me when we attacked, Iran's nuclear facilities. All of a sudden, it was the U.S., acting as the global superpower, really doing something incredibly impressive. And I think that was a big win and sent a message to the rest of the world. Okay, the U.S. hasn't gone back and gone completely isolationist. They are still doing there. So to me, that would also really help change the narrative, I think, globally. What is the U.S.? So I think that was one of the most, instrumental things that the administration has done, is that attack on Iran.
There was a worry also that August 1st would just become the new July 9th, and this would continue, the new April 2nd, and this would continue through the next, 12 months.
Yeah, and so you get some certainty. Maybe Thursday, of course, we have a potential court ruling that could upend some of that certainty. But at least there is a path of travel that people can understand for now in terms of what at least the ceiling could be and what the floor is.
We'll talk about that court ruling in just a moment. Peter Tchir of Academy, it's good to see you, sir. Pete, thank you. Up next on